And of course, the all costs are being what is going on with QE and this general shift of wealth towards the very rich from the middle classes. I don't want to get too hung up on that because it's a somewhat different story. But the British pound then seems to be doing very, very, very well indeed. And if I bring across, bear with me a second because I just need to bring up chart. We'll look at this one. It's always a week in arrears. So whatever figures we get published, then it's always a week, at least a week out of date. So we've got to keep that in mind, that it's for the previous week. So consequently, we're not really going to be using this as a short-term timing method. We go to the charts for that when this tells us that just maybe we could be due something of a change, something of a reversal in trend. But what it's very, very useful for is timing longer-term trades. Now, at the moment, what this is showing us, I've got this clicked on leveraged money. There are various other categories. But it's the leveraged money which is the most instructive one, because these are the traders who will have to get out if the market goes against them. And if they have to get out, the chances are that the market will move really quite nicely with a change of trend. So a point of explanation then, first of all, we are looking at these histograms. The blue histogram, you can see there, that's those who are long the GBP. And then the orange ones, well, they're shorts. And then the green, this little green line, is the aggregate position. Okay, that's the average more. Now, you may well be familiar with open interest charts, and open interest charts will tell us what this overall position is. So there's a fair bit of open interest out there, meaning that there are a lot of traders who are positioned. And over a period of time, we've got a large long position that has been built up. And in fact, it's been getting greater and greater and greater and greater. And that goes back, you can see, it runs back until November last year. Now, the number of shorts in the market has been overall flat to gradually declining. So what this means effectively is that the majority have got a lot of long positions actually open in the market. They haven't been closed. They are waiting to be closed, and the majority of traders then have got optimism that the GBP will go higher so that clearly they can sell out at a profit. So there are a lot of longs in the market, a lot of long open contracts just sitting there waiting to be closed. Now, why does a trader close a contract? Well, that trader is going to close it for one of two reasons. Either it's gone very nicely in that trader's favor, and he or she is sitting on a whacking profit, and the time comes when they think, well, we better take the profit. Now, the other situation, of course, is that the market just might come against them. And if it comes against them, then they're going to be sitting on a loss. And of course, sooner or later it's going to hit their stop loss, or it's going to hit their pain threshold, and they're going to close it out. So you've got those two situations, those two opposing times when traders are going to close these positions. So if we just consider that for a minute, then we've got this big long position in the market in cable. Now, let's move that out of the way for a minute and take a look at the actual chart of what is going on. Daily chart, what we can see is that price has been moving up. So over here from the left to the right, it's been in an uptrend. And for a period of time, those longs have been absolutely right. They've been absolutely right. But what we so often find is that we can get a big, big imbalance in the market. That's exactly what we've got in cable. We've got a massive number of longs. And I reckon that we're at a critical point. We're at a critical point at the moment because it went to a new high, as we can see. It didn't quite make 170. It's now moved off in a classic little ABC move. And there's a level that is going to need to be maintained. And that level is the level of the low, the recent low of 167. If price would have dropped down below there, then I wouldn't be at all surprised that we could well find that those heavy longs in the market, well, they could flip round. It's entirely possible that they might start to find that their stops are going to be hit and they need to sell out. So whenever I see a commitment of traders report, which is showing there's a big imbalance on one side of the market, that market is just waiting for an upset. It's just waiting for something to change the situation from the consensus that everyone believes in. The whole thing could turn quite rapidly, and if and when it does, then we're going to see fireworks. Right, so that's taken a little glance at the British pound. Now, I'm just going to flip over to another one for a moment, which has been a real good mover in both directions. We can see that it's been pretty high. And then it tanked on down, and a lot of people are saying, oh well, it's China. It's China where the Australians were selling an awful lot of aggregates, etc. And when the gold price was really, really strong, they were getting a lot of money for their gold, and that's what held it up. And then all of a sudden, China came along, and gold started to come off, and then we get this tumble right the way on down. And it's been sort of rallying up a little bit since then. So let's just bring across this commitment of traders report and have a look at it for the Australian dollar. And what we can see is that, again, there have been a lot of longs in the Australian dollar, a lot of longs. And if you look at the date, that's January, around about the 21st. So if we just flip back to around about the 14th of January, we've got this sort of massive number of longs in the market. Okay. Now, let's just pop that down for a moment and have a look at this. And let's just put a date on this. That's a 24th of the 1st. Let's just flip it back a little bit and let's put a line. At around about this time, this is when the market, okay, had decided that it was ready for a turn. And turn it did. And turn it did. It turned in a big way, and we then saw it absolutely take off and move up strongly.